If you're a real estate investor or you want to be a real estate investor, in this video I'm going to show you how to buy real estate using high cash value whole life insurance. I'm Barry Brooksby. Welcome to my Wealth Optimized YouTube channel. Using high cash value whole life insurance to buy real estate allows you to create wealth in two places at the same time. For example, when you take a policy loan, you are still earning interest and dividends on your total cash value, and you're making money in your real estate deal. We call this the velocity of money, and it allows you to create more wealth along the way. Let's dive in and learn how to buy real estate with cash value whole life insurance. But first, let's look at a properly structured high cash value whole life illustration. This whole life illustration is designed for maximum cash value growth, and that's the goal. You want as much cash value growth in your policy as you can possibly get. We're looking at this for a 37-year-old real estate investor. He's putting $50,000 a year annually into the policy, and he's doing lump sums of $100,000 for 4 years. So we see here for 4 years, there's $150,000 per year going into the policy. Starting year 5, he reduces down to his $50,000 premium. That will run through the age of 50. And then for the next 5 years, from 51 to 55, he'll put in the minimum premium of $7,100. And notice that at the age of 56, there is no more premium going into the policy. He's done funding. But notice that the cash value, even with no money going in, still continues to grow. And we see that here. 1.9 million, 2 million, 2.2 million. It keeps growing over time because he's earning a guaranteed rate of return and he's earning an annual dividend. These policies have a flexible premium. He could choose to put in the $7,000 in the second year if he wanted to, or he could fund the full $150 as we see here in the second year. There are two ways that we're going to look at him using a policy to buy real estate. And we're going to be looking at this net cash value column. In year 3, he's sitting on $450,000 of cash value. He wants to buy a home for $400,000. This is going to be a real estate rental property. It will have positive cash flow. Because he has $450,000 of cash value, he can take a $400,000 loan for the full purchase price. There are instances where you'll get a better deal as a real estate investor if you can close fast with cash. So take advantage of that. You might choose to refinance with a bank later, but your policy allows you to access cash value within 3 to 7 business days. It's very quick. The insurance company does not require you to do an application. There is no credit check, and they are not questioning you, what do you need the money for? So the $450,000 that he has in his policy for cash value, when he takes the $400,000 loan, this money is not physically removed from his cash value. He will still continue to earn interest and dividends on his $450,000 total cash value. This allows him to make money in his real estate deal and still make money in his policy at the same time. And as I mentioned earlier, we call this the velocity of money. You're making money in multiple places at the same time. Now let's look at a policy loan with option number 2, which is an $80,000 down payment. He's going to get bank financing for the $400,000 purchase, and the bank wants him to come in with a 20% down payment, which would equate to $80,000. He's only going to come out of pocket with his closing costs. That's all he's using his actual cash for. And because he's taken a policy loan for $80,000, you'll remember from earlier, he will still be earning interest and dividends on his total cash value. He can do this real estate deal using option 2 as soon as the first year. As a matter of fact, with his $141,000 in cash value year 1, the insurance company allows him to take a policy loan as soon as 30 days after he started the policy. So he can funnel his money through the policy, make money on the real estate deal, and continue to make money inside of his high cash value whole life policy. As a real estate investor myself, I've purchased properties using my high cash value whole life policies. There's another name for this called infinite banking, or the infinite banking concept. It allows you to create more wealth along the way. As a matter of fact, there are many benefits of high cash value whole life and the infinite banking concept. You're able to grow this money guaranteed. You have access to the liquid cash through policy loans for real estate, just as we've looked at. There's tax advantage growth and tax-free use of money. All the gains, all the growth, I teach you how to use that money 100% tax-free. Flexible premium options. He could continue to fund the $150,000 a year into year 5, year 6, year 7, but he could also go down to the minimum of $7,000 a year, or any amount in between. These dollars are not tied to the stock market. There are no losses. In a properly structured high cash value whole life policy, you make money every year. And as you can see, there are high contributions allowed. You are not restricted in these policies like you would be with a 401k or an IRA. There are collateral assignments that you can use with banks. In other words, you can put up your death benefit and or your cash value with a bank, which they love because it gives them more collateral to secure the loan and makes you a more advantageous borrower. And as I've shown you, your total cash value grows despite policy loans. You're making money in two places at the same time. I would invite you to learn more and see your own numbers. Discover how a high cash value whole life policy will work for you. Check out my other videos on my @Wealth Optimized YouTube channel. I hope to talk with you soon so we can look at your numbers together.